The Standard Deviations podcast is a weekly production that looks at money, mind, and meaning, all through a psychological lens. Each week, psychologist and New York Times bestselling author Dr. Daniel Crosby interviews a fascinating new guest, experts in everything from finance to literature to wellness.
When was the last time you splurged on something when you knew it probably conflicted with one of your financial goals, like paying down debt or saving for future fun in retirement? Well, if you do this, you're not alone. It's because of present bias, or to use the psychobabble term, hyperbolic discounting. As humans, we have a tendency to let the immediate rewards of the here and now win out over a desired future reality. To learn more, check out the Cash Dash Dash, a planning tool brought to you by the Guardian Network to see just how much your short-term spends might be impacting your longer-term financial goals. Play today by visiting www.livingconfidently.com/play. Hello and welcome to the Standard Deviations podcast. I'm your host, Dr. Daniel Crosby. I'm joined today by John Lentz VII, a financial representative at Strategic Wealth Group. We're going to spend some time today talking about cash flow, caretaking, and small business in the time of COVID-19. John, welcome to the show.
Thank you, Daniel. Thank you. I really appreciate it.
So I have never met the seventh.
It's an interesting fact. I have never met anything close to the seventh either. And I'll tell you the reality of it is my family, going back for generations, my sons are not, none of my sons are John Lentz VIII. I'm named after my grandfather, who was the sixth. So it's actually the firstborn grandson will carry the name on. So in reality, the John Lentzes go back for 14 generations. I'm the 14th. I've had two sons, so the pressure's on one of them to have a son, and he will be the eighth.
Oh my goodness, that is so much pressure. So we have, my son is a William, but we the chain was broken somewhere. We would have been to about 7 or 8, but somebody dropped the ball there in the middle. And
Wow.
So we had to start again. So it is a lot of pressure. I understand the pressure very intensely.
Yeah, I'm glad I've done my part, and now it's up to one of my two boys.
Yeah, don't screw it up, boys. Very good. Very good. So we're going to talk a lot today about your professional life. We're going to get into everything from managing cash flow to the role of a financial advisor as a caretaker and friend, all the way to talking about small business. But I'd like to start out by talking about maybe something personal about you. So besides being the seventh, is there something unique or personal about you that not many people know?
Well, one of the things that, and the seventh is one. I hadn't thought about that one, but one of the things that those close to me know is the following, and that is that my wife and I are very passionate about travel. I am a disciple of the Strategic Coach program. For many years, I was in the program, although that was a while ago. And one of the things that I've done for really my entire career is track how I spend my days. Free days, focus days, and buffer days is what Dan Sullivan uses in the Strategic Coach. And for the last 5 or 6 years, since my youngest went to college, I've been really, really tracking and really trying to break my personal best records in terms of free days. And the concept of scheduling free days first and scheduling a lot of free days is the fact that the more free days you take, the more productive you're going to be in your business. And last year I had over 200 free days during the year. And if you take out 104 weekends, that's 96 to 100 weekday days that I was not in the office. And I'm not saying I didn't work at all, but that I was not in the office or I was traveling somewhere other than where I live. And that was my personal best. I broke the record from 2018 by 5 or 6, and had one of my most productive years of my career. So I'm a big believer in the fact of rejuvenation that comes with taking these free days and travel. My wife and I spent a month in Greece, all in the same place in Santorini, to kind of, dive into the culture, not just be a tourist, but actually live there. We spent a month in Asia, and almost the entire month of December in Asia. And so I would say that would be an interesting fact about how I've managed to run my business and continue to grow and have a successful business while also, taking a lot of time off as well.
So I love it. The thing to me that's the most broken part of, I think, American work culture is not allowing adequate time for, A, rest and rejuvenation, and B, just long-term thinking. I feel like most sort of white-collar American workers are so caught up in just back-to-back meetings, back-to-back now Zoom meetings in the age of coronavirus, that we're so sort of overscheduled. I find that my best work is done when I have an entire day that's free. I've noticed two things. I've noticed that, even a day with one or two distractions seems to get sort of chopped up. So I try and keep absolutely free days for just thinking, planning, and getting real work done. So I'm glad to see we're on the same page there.
Yeah, I agree. I'm kind of old school, and I've always been about work and hard work and putting the work in, and the hours and the activity, number of appointments that I have, and that kind of thing. So it's been a paradigm shift. And I will say that because I essentially took 19 weeks off last year, that meant close to half the year I was not in the office. I do work really extraordinarily hard when I am in the office, but I have the energy and the creativity to do that. And then another major change, just to kind of confirm what you're saying, that I made about 3 years ago with my schedule. The person who handles my schedule is typically I would always have 4 meetings a day, 10, 12, 2, and 4. And about 3 years ago, we decided to block one of those 4 every day. And didn't matter which one, but once 3 were full, she would block the 4th one. And again, that increased my productivity dramatically because it gave me time, maybe not a whole day, but it gave me time to do some business planning for my own business, to better prepare for upcoming meetings and that kind of thing. So I definitely think having blocks of free time, whether it's days or blocks during the day, is really important and a key factor to productivity.
Yeah, absolutely. So we set up this meeting, I don't know, a couple of months ago, and in the intervening couple of months, the entire world fell apart, right? Like everything changed. And so we had a schedule of what we were going to talk about. I want to deviate from that somewhat. You work closely with a lot of small business owners, and I think I would be remiss if I didn't start off our conversation today by talking about the impact and getting your perspective on the impact of COVID-19 on small business owners. So I'm specifically interested in hearing what you're seeing from your sort of boots on the ground perspective. And then I'd also like for our listeners to hear what you think we can do to help small businesses. I think there's an enormous will to help small businesses, but I know personally that I struggle to know how best to do that sometimes. So I'd be fascinated in your take.
Well, I know, number one, I would say that, the time to prepare, your business for a crisis, no matter what the crisis is, any sort of event or systemic issue that creates a crisis, is obviously to be prepared before the crisis begins. And a big part of the message and the conversations that I have with my business owner clients, prior to the crisis, was about preparing, for being prepared for things like this and preparing the balance sheet for bad things that can happen. One of the things that I talk to clients about, whether they're business owners or not, is the fact that I'm 53 years old. I've spent my entire adult life building my own balance sheet, whether it's my business balance sheet or my personal. And my number one priority in terms of my own financial planning is protecting what I've spent my life up to this point to create. Secondary to that, obviously I want to continue to grow and so forth, but number one is protecting. And so I believe that one of the things that I'm proud to say and really happy to report and have had dozens and dozens and dozens and dozens of conversations with clients over the past 6 to 8 weeks as we've been involved in this crisis, is that most of these clients are worried and concerned but most of them are in good shape to withstand at least a modest period of time in terms of a shutdown. I was listening to a podcast over the weekend, and I heard a statistic that the average business in America has enough cash their burn rate is such that they have enough cash on the balance sheet to survive 8 days without income. And I would never want any of my clients to be in that position. And I think, maybe we'll talk about it as we move forward, but a lot of our planning is around protecting the balance sheet and building the balance sheet to deal with situations just like this. I have some clients, to answer your question specifically though, many of my clients are slow but not stopped. And thankfully, that's the case in the types of businesses that I have. Many of my clients are in the construction-related type businesses, real estate-related type businesses, and they're obviously very, very slow. Operating at 20 to 40% probably in terms of normal sales and revenue. I even have some restaurant clients who are in that same boat, slow but not stopped. In that, they're doing takeout and delivery type of business, which is severely cut their revenues, but it hasn't stopped them. So I really feel for those who have had to shut down altogether. I know that would be difficult mentally as well as, financially and from a business perspective. In my case, most of my clients are in good shape. They've taken advantage of government programs, which are needed. For the most part, very few of them have had to lay off workers. But part of it is because of the planning they did ahead of time to position themselves and position their balance sheets so that they can withstand some sort of crisis, whatever it might be.
So you work primarily with small business owners, and you are sort of famous for this idea that one of the biggest mistakes that many of them make is counting on monetizing that business at some future date. Now, I have been a small business owner. I've talked to many small business owners and can vouch for this being very much the mindset. Why do you think this approach is such a mistake?
Well, I think for many reasons, the most obvious of which is there's no guarantee that 20 years from now, 30 years from now, or even 10 years from now, I'm going to be able to monetize my business, or at least in a sufficient way to provide financial security. Technological change and the world is moving at a faster and faster pace. And, there are certain businesses that existed 10 years ago and 20 years ago that just don't exist today. But beyond that, one of the things that I believe, and I tell clients, is that I believe one of the signs of a successful business owner is the extent that how well do they over time systematically transition business cash flows to their personal balance sheet. And that, in my mind, is, if you boil it down, what owning a business is all about. Systematically over time transitioning business cash flows to my personal balance sheet. And if I'm not doing that, then what's the point? For most of my business owners, their most at-risk dollar are the dollars they have invested in their business. It's the riskiest investment they could possibly ever make. They're the last ones to get paid, especially in crisis times like this. The employees get paid first, the vendors get paid, the rent gets paid, and then hopefully there's something left for the business owner. Every headache, every mistake, every time somebody does something wrong, the business owner is the one to step in and fix it. And so that's all worth it if I'm building financial security along the way. If I'm not, in my mind, there's no point in even running that business. And so really that is the idea. In addition, if I'm systematically building my personal balance sheet, it takes pressure off that ultimate sale. What if I was selling my business in a time like now, or if I had to sell? Obviously, I'm not going to get top dollar, right? Or what if there's just a prolonged recession as a result of COVID-19, and selling my business in anytime in the next 3 to 5 years is not going to be at the values that I might have expected, even just two or 3 months ago. Well, if I've systematically, transitioned business cash flows to my personal balance sheet, it takes pressure off that single event to maximize. Now, certainly I want to maximize the value, but it takes the pressure off in terms of creating financial security when I do exit that business.
So it's fascinating how an event like COVID-19 can change all of our minds, because when I posed this question to you a couple of months ago, initially for your consideration, it seemed like a really revolutionary idea. Like, right, you shouldn't rely on this someday, sell your business. I think that lesson has been driven home rather forcefully of late, because people who were planning on exiting, now or soon at a certain number have now had that stripped from them. I mean, and there's no telling when. We may have a V-shaped recovery, but we may be at this for many years, and I don't think anyone really knows. And so I think it's good to keep in mind what you say, to be creating cash flows all along the way. How practically can business owners do this? How can they create these cash flows? What are some of the cash flows, and how can they begin to transition those assets from business assets to personal assets?
Well, there are a number of different strategies, and really most of it just comes down to having a structured plan of some sort. But for example, one of the things that I'm a big believer, and really, Daniel, you're exactly right. A lot of the things that we tell our clients, they may sound interesting, but they may not particularly take it as seriously as they should. And now one of those things has happened. But bad things happen all the time. Last year I had 3 clients call after having been served with a lawsuit. One of them had a child in college that was in a very bad car accident. The other 2 were kind of business related issues. And, when those clients called, they didn't say, "Hey, John, give me an update on my 401k. How's it doing?" They said, "John, I was just served. Please tell me my insurance is in order and I own my assets properly because I'm being sued." And bad things happen all the time. People get sick. People lose their jobs. Obviously nobody can anticipate black swan events like this, but bad things happen either way. And so one of the things that, I recommend to my business owner clients and that I try to do myself and is simply the fact that, as I said earlier, the dollars that I have in my business represent the most at-risk dollars I could possibly deploy in any sort of investment. I have roofing clients, and they literally have hundreds of guys out on roofs every day, other people's roofs. And obviously accidents can occur. That's obviously a risky business. But even in my own business, which is a financial practice, we have 10 or 15 employees here. We have clients coming and going all day. Bad things could happen here as well. And so one of the things that we talk to clients about is, is having the proper amount of operating cash on the business balance sheet. And ideally not having $1 more than that appropriate amount. And every client's idea of what amount of cash on the balance sheet is appropriate is different. But whatever their goal is in terms of appropriate level of cash, we want to have some sort of automatic, systematic way to remove that excess cash from the business balance sheet and put it in more protected, vehicles. For example, in Florida, we have tenants by the entirety registration. So while that cash is on the business owner's balance sheet, any sort of liability that exists in that business, that cash is at risk. Yes, they might have $1 million of liability, but there are many things that could happen that $1 million would be a drop in the bucket. As soon as we transition excess cash to their personal balance sheet, it could be a money market titled tenants by the entirety, husband and wife. Now that asset is not only off limits to creditors of the business, but it's off limits to creditors of either the husband or the wife. Somebody would have to get a judgment against both to go after those dollars. So many of our clients in their systems with their bookkeeper, we have that threshold established, whether it's monthly or quarterly. And if the cash on the balance sheet on a particular day of the month or day of the quarter exceeds that number, they automatically sweep it out. And we could obviously just as easily sweep it back. But that would be an example. Another example would be, purely from a standpoint of financial security, one of the best investments a business owner can make to take advantage of the fact that they're a business owner is owning their owner-occupied commercial real estate. Over time, over a long period of owning a business, the business is paying for this real estate that is ideally owned on my personal balance sheet, not on the corporate balance sheet. Again, as I pay that rent, I'm systematically transitioning business cash flows to my personal balance sheet. And then there are many other examples of that, but the bottom line is that those would be the things that I would be thinking about as a business owner, are ways that I can spend money that is a business necessity, but have that benefit, the building of my personal balance sheet in one way or the other.
Makes a lot of sense. So one of the things that's so difficult from a behavioral perspective is getting people to consider the possibility of negative events. And so, research has shown that people, when you bring up, people's mortality, the potential that they could be hurt, they could be in an accident, they could die, people tend to get testy and people kind of stick their head in the sand. I hope if there's one positive, and I'm sure there will be many positives, but there's a positive to come out of the whole fight against COVID-19. I hope it's that people will see, and learn to better prepare for things like this, because you make a great point that we don't always have a global pandemic, but, somebody's always having a bad day, and one day that's going to be, it's your time, it's my time. That bad day is your time or my time. So how do you get people to consider the possibility of how do you get people to manage risk when talking about negative things is so hard for people to swallow? How do you get them to consider that potential?
Well, that's a great question. And, I don't have your expertise in terms of behavioral finance and so forth. However, I think a lot of it has to do with where you're coming from. And, if you're throwing out these bad things that could happen as a way to try to encourage a client to take action, I think they see through that. But I've been doing this for 33 years. I have a lot of clients, and I've had a lot of bad things happen to clients, and I've had bad things happen to me. And I just think that, when I talk about how important it is for me to protect my balance sheet as, my life's work in terms of building financial security for myself and my wife and being able to create a legacy for my children, that is my planning priority number one. And secondary to that is growing that financial security and that balance sheet and that legacy that will be there for my kids. I think clients understand that I'm coming from that I'm talking about these things because I care about them, and because I have real examples and real experience of clients having to deal with these same things. In addition to having a handful of clients sued last year, I had a number of clients become permanently disabled for life. One of my clients can only move his eyes. He had a stroke, and he's 40 years old with 2 kids and a wife. And so I think these are real life examples that hopefully nothing bad ever happens to any of us, but it does happen to some of us. And if it does, it's too late to go fix those facts after the fact. My liability insurance had to have been in order, when that event occurred. If I should have had a $5 million umbrella, but it's a $1 million umbrella, it's too late to fix that.
Right.
Or if my disability insurance wasn't in order, or I didn't own my assets correctly, it's too late at that point. And I think clients understand that this is something that I take it, not only is it my own number one planning priority in my own balance sheet, but as their advisor, it's my priority is to protect that balance sheet first. Then we work on growing it.
So if we look at the psychology of fear as a motivator, fear is sometimes an effective short-term motivator, but the effect is really not lasting. So I think your impulse to say, we don't want to scare people is a good one, because A, it often backfires, and B, if it even works, it's short-lived and the motivation kind of evaporates pretty quickly. I think what you do by giving, citing concrete examples, citing real-world examples, and couching it in terms of what people value themselves, is something that's a lot more palatable and a lot more, it's just a lot more honest. It's a lot more palatable, and behaviorally, it's easier for people to hear and to act on. So I hope, I hope that people will begin to take this opportunity where it seems like a lot of things are breaking all at once, to think about the potential for how can we prepare for the next disaster, whether it's a global disaster or just a personal disaster, which happens all the time. So one of the things that I like that you talk about too is you take, I'll call it the Stephen Covey approach. I first heard of this concept when reading Stephen Covey's work, to begin with the end in mind. You say that small business owners should start building their business from day one with the exit planning in mind. I want to hear from you what that looks like practically. How do you begin to start building a business with the sale of that business in mind?
Yeah, so it's a great question as well. John Brown is a business exit planning expert, and he's written several books on the subject. And he says that as well. He says, the time to begin planning for your exit from this business is the day you buy the business or the day you start the business. We're all going to exit the business. It's either going to be a voluntary or an involuntary exit. And obviously, if it's involuntary, it's not something that we're going to be able to plan for, or at the time, it's going to have already been addressed. And so, when I'm also engaged with a lot of clients who are now at the point they're ready to sell now, and they might engage with us to have us help them, structure things so that they can, and maybe even, introduce them to the right people, investment bankers and things like that, to sell the business. And so I know for a fact that the following would be the key factors as to whether my business would be attractive to a potential buyer or not. Number one is the business has to be profitable, and it has to show a history of either increasing profitability or steady profitability. If not, obviously, I'm not going to be able to sell it at all, or not for much of a price. Number two, the business has to have a diversified customer base or diversified client base. If I have a great business, but I have the majority of my sales go to 2 or 3 customers, then third parties are not going to be as interested in paying top dollar for that business, because if you lose one of the customers, the business value would decline dramatically. The third factor in having a business that is saleable is that the business should not be overly reliant on me as the business owner. I should have a good team, a good management team, a good executive team. That executive team should have ever increasing responsibility and ability to drive sales and run the company. And the more I can kind of take a back seat to that, the more valuable my business is, the more of a turnkey business it is. And the more it's reliant on me, the less my key employees are involved, then the less likely I'm going to be able to sell it at all. And then finally, if I do have that management team and I have a good bench of maybe future executives, are those executives engaged? And what I mean by that, are they compensated in a way that not only are they motivated to help me grow, profitability of the company, but also is there some sort of golden handcuff arrangement whereby they're going to be rewarded if they stay and if they help us grow, but if they choose to leave, prior, they're walking away, and that's kind of this golden handcuff category. And one of the biggest fears of third-party buyers is, well, if I don't want to buy this business, you go off and ride off in the sunset as the owner, and your two key people leave the day you leave, and they open up the same business, and now they're my competitors. Well, these golden handcuff plans can assure that they will be at least financially motivated to remain with the new company, at least for a period of 3 to 5 years. So, even if I don't intend to sell my company in the near future, addressing each of those items is still extremely important. Obviously, I want to be profitable. It's a risky business if I'm over reliant on just a handful of customers. If the business is truly reliant on me as the business owner 100%, then really I have a job, not a business. And then finally, I want my management team to be properly rewarded and compensated. And in my mind, I always tell clients that really there are three ways that I would want my executives to be compensated. Number one, salary. Number two, some sort of cash incentive compensation like a bonus or commission. And number three, some sort of deferred incentive compensation. Deferred being the portion that would provide me that golden handcuff benefit.
So as a small business owner, I broke every single one of your rules, and to my to my own detriment, I'll tell you. But yeah, I remember very, very vividly, all too vividly, just building what was effectively a job, right? Building something that really had me at the center, building something that was over reliant on one or two big clients. It's really something to keep in mind, to begin with the end in mind, and to build that from the very outset, because it is too easy to get complacent. I think you can quickly, if you're not intentional, you can build yourself into a nice job, but not much of a scalable business. There was actually a great article out today on LinkedIn about the difference between a startup and sort of a solopreneur. And the person was basically saying, like, many businesses that call themselves startups are not really startups, because the assumption with a startup is that there won't be centrally controlled. It won't be one person sort of at the heart of this, and that it will scale quickly. Every dollar you put in will turn into 5 or 10. So really good advice. I want to change gears here a bit. I'm the son of a financial professional. And when I started to consider going into the industry as a young man, when I was just beginning college, I initially chose not to. I initially chose to pursue psychology because I didn't view the world of being a financial representative, a financial professional. I didn't view it as a helping or a caretaking profession. And I recognized these helping, caretaking impulses in myself and felt like it was a bad fit. Now, since that time, my gaze has matured quite a bit. I've gotten a much more nuanced look at what financial professionals actually do. You lost your mother at a very young age, and you talk about how that made you into a caretaker and a leader at a young age. Can you talk about that experience and how you bring it to your professional life today?
Sure. Yeah. Yeah. Like you said, my mom died when I was 5 and my sister was 4. And that resulted in really, a very tumultuous childhood throughout the rest of our childhood. We moved all over the place. We lived with different family members, never went to one school more than 1 year. And just lots of other things beyond that, even that we don't need to get into. But the bottom line is, even at a very young age, even some of my family members today, my aunts and uncles, describe how I just took on this role of being the protector, particularly of my sister. And even my dad, who is a young man who just lost his wife in his early 20s and had 2 young children in the 70s when that wasn't very common. And for whatever reason, that the way that impacted me and impacted my life and my personality and formed kind of who I would be in the future is that of a caretaker. And as I said, I felt that very strongly with my sister and my dad. And even as I became an adult, I was always attracted to people or situations who I felt needed help or needed to be rescued. I always joke that my wife and I, we met very young, and we kind of rescued each other. Both of us headed in the wrong direction, but, so she fit in that category. And in terms of my professional life, honestly, I can't think of many things that I could do as a professional that would give me more satisfaction and more ability to feel that I'm taking care of people. Just the whole commentary that we talked about earlier about protecting them if something bad happens. That's taking care of people. When I get those calls, God forbid, I hope it doesn't happen that often, but when I get those calls, I'm the first person every one of these clients call, no matter what the crisis is. And I want to have good answers for them. I know that this isn't my typical client, but when I meet with If I'm introduced or recommended to a single mom, I even have a stronger desire to help them because I feel, she needs help, or maybe somebody who's recently lost a spouse, particularly if the spouse was the one who handled a lot of the business issues, whether it was the finances or whatever, feeling that they need someone in their life to help, and I want to fill that role. And, we talked about the crisis that we're currently in the middle of, and it was a very emotional time, late February throughout March, for me and for every one of my clients. I was adamant in my office, for example, that we needed to be open. A lot of my staff were afraid and scared and, wanted to go home and be with their family, which I understood. And we did, work from home for the most part, but our offices remained open because I wanted clients to know that if you need something, we're here. The phones will be answered. They're not going to go to voicemail. And probably for the month of March, I would say, I worked from the minute I woke up till the minute I went to bed, 7 days a week for the month of March, either on the phone with clients, on Zoom meetings, or corresponding with them by email. And I told my staff that this is why we have a business, is to be there at a time like this. If we close our doors and open up when things are fine again, we won't have a business to come back to, number one. But that's not what we signed on to do. That's not what our mission statement is. And I feel that, and I felt that as I talked to all these clients every single day throughout the month of March, is that they basically just wanted reassurance. They wanted to know that their assets are structured in reasonably well, that their business is okay. And even though they already knew this, they wanted that caretaker of their, financial world, their balance sheet. They wanted a conversation with that person to feel better about things. And to me, that confirmed this idea that we are those caretakers, and that there are very few. Obviously, they're a doctor, maybe they're religious, leader. But after those two, I think it kind of comes to somebody like myself in terms of how important, especially at a time of crisis, we are, and why it's so important that we be there for our clients.
As I said, my view of the role of a financial professional has matured and changed so much over time. And, I've done quite a bit of research into why people who work with financial professionals tend to outperform those who don't. And a lot of it comes down to caretaking. I mean, it's protecting people from themselves, like from a behavioral perspective, keeping them from actualizing their fear or their greed. It's protecting people from predators, right? It's protecting people from those who have ill intentions with their money. It's protecting people from, charlatans and the evil folks that kind of inhabit the dark corners of the financial world. Right. And it's protecting people to help them learn to stick up for themselves and follow their dreams sometime and be the entrepreneurs they know they can be. So, my very black and white 20-year-old conception of what it was to be a financial advisor, which was, someone with a big calculator and a green visor or something. It's changed pretty dramatically since then. So, thank you.
Daniel, I was just going to say that, when times are great, back in the 90s, you could throw a dart at the Wall Street Journal and you're going to make 30% a year. And for the last 3 or 4 years, we've had a pretty positive market. And to some degree, investments themselves are a commodity, and that's why we've seen changes in how a lot of investments are structured. But I think it's everything else that the clients, that the clients need that caretaker for. For example, on their own, clients might invest more aggressively than they should because they feel the bad times are never going to come back. It's our job maybe to encourage them or explain to them why we should be more moderate. Or things like I talked earlier, just something as simple as how I own my accounts and my assets, my real estate, et cetera. Those are easy things to fix. It doesn't cost a penny to fix them, but they need some sort of caretaker to help them make those decisions. And so I think it's my role in working with my clients. And I know every financial professional has a different business model and a different approach and role. But my role really, in my way, and maybe this goes back to my background of feeling like a caretaker and instilling that inside, is that I want to be the macro advisor, the one person that knows everything about my client's world, business and personal, and help them with all of it. Some of those areas I'm the expert and I might actually help with implementation. Some of those I'm not, but I still want to help them make the best decisions possible in all of those areas.
Well, it's interesting. I think COVID-19 is such a different crisis than the financial crisis was, because that was 0809 was a crisis of money, right? It was a crisis of confidence in our banking institutions and our financial institutions, but no one was scared for their health. And so this, the COVID-19 crisis is pervasively scary. And so I think it calls for a holistic relationship. Like, you need someone to be a caretaker holistically. And I think, like you said, aside from maybe a religious leader, there's not many people in your life with more intimate knowledge of what you value, what you need, and what you're trying to achieve than your financial advisor. And so I think this is the time when the best financial advisors in the world really, really stand out.
Exactly. I agree. Most definitely.
So thank you for going there. Thank you for allowing us to talk about some personal things and sharing a bit about your journey, John. Like, as we close out today, we have a segment on the show, which is, a hallmark of talking to a therapist, is free association, where I throw out a term and you just kind of hit me with the first thing that's on your mind.
Okay.
So I got a couple for you. Okay. So the first of them is a profitable but overlooked type of small business.
Okay. It's interesting because it amazes me how many different types of businesses and how people can make the most unexpected little niche of a business highly successful. As I mentioned earlier, a lot of my clients are in construction. I have some clients in restaurants, both fast food franchise as well as individual single sit-down restaurants. Floor covering, roofing. One of my clients in the Southwest just sold his business. He's a specialty trucking company, specializing in wide load hauling, and just sold his business for $15 million. So, and it amazes me how diverse and how different these successful businesses that I see are. And I really think I can't point to a particular overlooked but small business but also profitable. But what I can say is, what I would observe as I look at all of the clients, all of the businesses that I see as being very successful and very profitable. Doesn't matter what industry they're in. Doesn't matter what niche they have. What matters is, do they run it like a business, or do they run it like, a sole proprietorship, a job? And you hit on it earlier. I'll just expand on it real briefly. One of the books that I read that was very impactful early in my career was the book Cashflow Quadrant. And, in that book, he talked about the four types of people. There's the employee who trades time for money. There's the sole proprietor who sees themselves as a business owner, but really they trade time for money just like the employee. And then there's the business owner who creates procedures and processes so that the business can, create profits and create wealth without his or her involvement. And then finally, there's the investor. And so I think that the client, without regard to the type of business that it is, those that I see that sometimes amaze me how they can create the profits that they do, it's because they run it like a business. It's not about them. It's not a sole proprietorship or a solopreneurship. It is a true business, and that, to me, is the key fact in creating a successful business.
So a former guest, Brent Beshore, has a firm that invests. He calls it sort of a baby Berkshire. They invest in other small businesses. And he has picked up some of the best businesses in the world doing the least sexy work you'd ever find. I mean, it's like porta potties and like, setting up tents and, just things. I feel like when I'm trying to brainstorm ideas about a business, it's always like robotics or machine learning or something. And there's a lot of money to be made in sort of out of the way places if you run it like a business and build it with some of the principles you talked about earlier.
Right.
Okay. So next question, what's the single best piece of financial advice you ever received?
Well, really, that's easy. And I've already talked about it, but number one, it would be, systematic savings. I learned this at an early age. I've always been a very, analytical person. Obviously, as we've already discussed, I didn't start out in life with any financial benefits whatsoever. And I'm a firm believer, and I talk to clients about this today, that if you look at your balance sheet today, your balance sheet is specifically a reflection of cash flow decisions that you've made up to this point. And your balance sheet 10 and 15 years from now will be a reflection of cash flow decisions you make going forward. And so I can't invest well enough. I can't do anything well enough to offset insufficient systematic savings. And on the other hand, if I am sufficiently systematically saving, let's call it 20% of my income over an extended period of time, even if I don't make the best decisions in terms of what to do with that cash flow, I'm still virtually assuring financial success in the future. So that would be number one, is just strictly systematic savings over a period of time. And then the second, which I've hit on, and that is, as I build this balance sheet, obviously, I should focus some of my energy on protecting it, not just growing it.
Yeah, people love to put the cart before the horse here. I get all sorts of questions about investing, and people, if you're lucky, right, and you're a great stock picker, which is of course exceedingly rare, almost vanishingly rare. But let's say you are a great investor, you can wring a couple extra percentage points out of the market if you're lucky. And again, all of that's for naught if you're not saving in the first place. So I think people often leave behind the important but less glamorous stuff in favor of the more glamorous but less important. So final question, what's your favorite movie that has some sort of money theme?
Well, my initial thought on that would be Wall Street. Wall Street came out in 1987, which is the year I started my career 33 years ago. And I will say it kind of inspired some desires to be successful in the financial world. But really, another one that I have always loved is The Pursuit of Happiness with Will Smith.
Great movie.
And I think that really, it's about money, but it's also about the American dream and the power of perseverance. And so forth. So I would say that would probably be the one.
So the Will Smith movie is a fantastic movie. He does a great job in that movie. The follow-up question is, have you ever worn a Gordon Gekko collar? Have you ever worn the contrast collar like popularized in Wall Street?
I did. Like I said, I started my career in 1987. So through the 90s, I had the collar bar under the tie and things like that we haven't seen for quite some time.
The whole thing. I love it. Exactly. Very important. Very important. Well, John, thank you so much for your time today. Thank you for all you've shared with us. We appreciate you being here and wish you and yours the best as we all try and get through this time of uncertainty.
Thank you so much, Daniel. I really enjoyed it, and I really, really like your podcast.
Thanks so much.
All opinions expressed by Dr. Daniel Crosby and podcast guests are solely their own opinions and do not reflect the opinion of or endorsement by the Guardian Life Insurance Company of America, Guardian, and its affiliates, subsidiaries, employees, and agents, including Park Avenue Securities and the Guardian Network. This podcast is for informational purposes only and should not be relied upon as a basis for legal, tax, and investment decisions. The opinions are based upon information participants consider reliable, and Dr. Crosby and Guardian are not responsible for the consequences of any decisions or actions taken because of the information provided. Guardian copyright is a registered trademark of the Guardian Life Insurance Company of America. All materials are subject to United States copyright laws. Copyright 2020 Guardian. John Lentz is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS. Securities products and advisory services offered through PAS, member FINRA, SIPC. Financial representative of the Guardian Life Insurance Company of America. Copyright Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Strategic Wealth Group is not an affiliate or subsidiary of PAS or Guardian. Guest speakers and their firms are not affiliated with or endorsed by PAS, Guardian, or Strategic Wealth Group, and opinions stated are their own. AR Insurance License Number 515560. California Insurance License Number 0181238. 2020-106066, expiration 07/22.